Hello, everyone. This is another edition of Stockommon Cents here with Philip Morris, here to talk about everything that happened in the market, things that we see, things that we're forecasting, and a little bit of financial tips. Hope you guys are having a good weekend. Without further delay, let's go ahead and get started. Currently looking at the S&P 500 for the week, we ended down 2.88%. This big candle right over here. Last week we talked about how we weren't able to stay above the what market? Around 43.50 range. As you can see, the red candle shows that we did hit it, weren't able to stay above it, and we rejected it extremely hard down. So it looks more than ever like we may be retesting the 41.20 levels. 41.20s. I don't have any reasons to believe that we're bounced back away from this, but I do think we could be touching these levels once again. Like I said before, it does seem like we will be range bound, seeming between 4,500 to around 4,100. Things haven't been going great with the war, but as long as we don't receive any more black swan effects, like China invading Taiwan or anything of that sort, I think we will stay range bound. So I do expect a retest next week. But once again, we are staying range bound. So the SP 500, we were down 2.88% for the week. Moving on to the Russell 2000. As you can tell, we also had another down week by looking at this red candle over here. We were down almost 1%. To be more specific, we're down 0.96%, getting ready to retest this level of 1964. As you can tell, we did go past it if you look at this wick, but we were able to find support and buy back up. That lets me know that we are at a respectable level right over here. Like I said before, we're looking to break this level in green around 2111. So we'll go ahead and see how the market does and see if it does try to rebound from here. If it does break through this level, let's go ahead and widen out a bit. Let's see where we could go. Actually, may have to go further out than that. So looking at this chart, if we were to break this level, next level, which looks like could be extremely scary hours, would be around here. And this would be around, what does it say? 1467. So dropping from 1964 to 1467, I think is highly unlikely. Last time we were this low, this was in 2020, September 2020. I don't think we'll get to that far, but anything can happen. So that is the Russell 2000. Let's talk about the things that happened this week. So once again, we're still dealing with Russia invading Ukraine. There's no new news. I know both sides are looking to get whatever they want. Russia looking for territory, it seems like. For Ukraine, looking like they just want to stay independent. We're not going to touch on their true debates only because we're not a political podcast or show. We just want to talk about things that affect the market. I do feel like once negotiations are held and ceasefire does commence and this all stops, I do feel like you'll see a quick rebound within the market. Reason being is, with the inflation in oil, with the inflation of commodities, I do feel like it is showing that we are having high rises in prices. So like, for example, this week we had nickel rising by as much as 79%, which is absurd, with the EU even pausing the nickel, trading in nickel. So this war is taking effect into so many different places. So once again, we're still waiting for things to calm down over there in the East. So no news there. Moving on to cryptocurrencies signed into executive order by Joe Biden. So this brings a little bit of legitimacy to cryptocurrency. For myself, I'm only invested in Bitcoin, which isn't a lot at all. ADA, which isn't a lot at all as well, and everything. But what the signing does do, so Biden ended up signing a bill that will allow, or executive order that will allow, the government to do extensive research into the technology, into cryptocurrency exchanges. So what he's basically trying to do is urge the Federal Reserve to explore whether the central bank should jump in and create its own digital currency, basically trying to modernize the dollar. We already know the dollar isn't backed by gold, it's already digital, but look into the research behind cryptocurrency to see how can we improve the technology behind the dollar. I do think it is reasonable that we do move towards a lot of these technologies. I mean, even Treasury Secretary Janet Yellen even quoted saying it will promote a fairer, more inclusive, efficient financial system. So also countering illiquid finance, preventing risk to financial stability and securities. So once again, this is big news. This is one of the main reasons I never went heavy into cryptocurrency, because I did feel like the US would, one for me, I do feel like the government would be moving towards the technologies just because to see the benefits of being able to be on, even being on blockchain and things of that sort. I do find that this will help make our dollar a little bit more modernized, but it also gives a little credence to people going towards cryptocurrency and things of that sort. This is very, very big news and something you guys should be watching. The next news is the Senate passes the Postal Service Reform Act that overhauls their finances and modernizes the agency. So what this basically means is we will be providing healthcare insurances for those working in the post office. We'll also provide them some monetary benefits that will help the UPS post office. So looking right here, I'm going to have this highlight. The bill will restructure the investment USPS that makes retired employees' health plans and add Medicare requirements, which combined are projected to save the UPS more than $50 billion over 10 years, which is major. Post office is one of the, I'm not sure if a lot of people know, but it's one of the agencies that's not really funded by tax dollars. The government actually pays for this flat out. So I believe I think last year, 2021, here we go, this is what I was reading. In 2021, the agency reported that they lost close to $5 billion, which is a net loss from $9.2 billion in 2020. And this is one of the biggest keys. The financial issues are blended on a variety of factors beyond how much mail is actually delivered amongst its pressure structure for retirement health benefits along chief factors. So this will be major. And sorry, this is a kind of a light week. But this is pretty big as far as what's going on. There are a lot of people who will benefit from this. With us, mail getters being being affected by this. But yeah, not much on this part. KPI numbers, key performance indicators. Let's go ahead and talk about a couple of things that did shift the market a little bit. So on Wednesday, we did have the JOLTS job openings. We had an increase of 11.26 million job openings, forecast being at 10.96 million. What this means is that there were more job openings and created during the month. So anything greater than the forecast is really good. So once again, this is the number of job openings in a reported month. Which lets us know that the economy is doing well. The more jobs, more openings we have, the more opportunities people have to get jobs. So that is pretty good. That was on Wednesday. On Thursday, we did have inflation numbers, so CPI. We had a forecast of 0.8 month-over-month increase. Actuals was 0.8, so we did almost rise by 1% increase. So again, inflation is still being a hot issue within our commodity right now. Core CPI, once again, increasing by 0.5%. Actual is 0.5%. That was along the lines of what we expected. And unemployment claims, we did rise by 7,000 compared to forecast. So we expected 220,000. And we hit 200, or our forecast was 220,000, and we did hit 227,000. So, and remember, the unemployment claims come out every Thursday. Every Thursday, you'll see these numbers populate. So this is pretty big news. This is one of the numbers that the Federal Reserve will use to determine how quickly or how much we rise rates by. And that's basically it for our KPI numbers. And then let's go ahead and talk about the stock of the week, which will be Chevron. I'm going to go ahead. This has been kind of chart light, but hey, it is what it is. Let's go ahead and do this. So here's a chart of Chevron. This is the stock of the week. Quick stock breakdown. This week it closed at $170.90. Previous close over here was at $158.65, market cap of $332 billion. So this is a stock that is pretty, in my eyes, pretty boring. But once you expand out, and this is a 5-year chart of Chevron, you can see the biggest pop has been within the past year, right? So if you look, this is a stock that if you bought in 2017 at $110, if you had held out all the way to the end of 2021, if you just held out, or if you just bought one stock or one share, you would have made a total of $6 because it did end at $119. But if you look, this is a stock that is very uninspiring. Very uninspiring. Chevron, if you don't know, manages investments of subsidiaries and affiliates. It provides administrative, financial, management, technology support to United States and international subsidiaries that engage in integrated energy and chemical operations. So we all know Chevron for gas, right? They're classified as an energy company, but a lot of their business operates through petroleum. So they have basically two streams of business. They have their upstream business, which is 23% of their business, and a downstream business, which is 73% of their business. And I'll go ahead and explain both of those. So their upstream business It's basically them developing and producing crude oil and natural gases, while their downstream business consists of refining the crude oil into petroleum products. Now, their chairman, which is Michael K. Worth, has been with the company since 1982. Since he started as a design engineer, but became CEO and chairman since 2018. So from this line over is how the stock has performed under Michael, right? Again, this is a stock that I'm extremely bullish on currently, yes, in the intermediate, right? Only because if they're dealing in oil and oil has been rising over weeks because of the war, then yes, this does correlate, and you can see how their stock price jumps from the beginning of the year at 117, getting to as high as 174. So they are profiting through this inflationary period. Now, but if you look at this stock, let me go ahead and show you some financials, and you'll go ahead and understand where I'm coming from. Let's talk about this. Here's their here's their price targets, right? Bear case is $109 within the next 12 months. Then we have some at 158, and then bull case is 184 with 16 buys, 6 holds, and 1 sell, right? But let's look at their fundamentals. This is what I really wanted to show you guys. So looking at their income statement, which you spoke about last week, if we look at their operating income, they are very steady. Their only negative OI year was in 2020, which is understandable, where they lost $5.4 billion, right? For the past, but that's one year out of 5 years, with last year being one of their highest performing years, where they brought in $17.3 billion. But just looking at this stock, altogether, if you were to look, let's look at it by quarter. All right, this is such a choppy stock. And by the way, this is a 10-year quarter chart. This is such a choppy stock that I wouldn't buy into it. This may be a good trade, but this isn't, to me, a good investment, especially when you understand where we are going as a country, right? We're going towards more clean energy. We're going towards more electric, solar, things of that sort. So if I'm looking for a company 10 years down the line, I may not look at Chevron. I may look at even a Tesla. I may look at an ETF. Let's pull up Tesla real quick. I may even look at a Tesla who performs in clean energy. I'll look at the ETF TAN, which is a solar ETF, and you can see this is their chart for the past 10 years, a nice incline. I'm gonna look towards more clean energy type stocks. Because remember, petroleum is not a renewable energy. It's something that is dying off. But with that, I just wanted to show you guys a company that, we're not gonna always do the sexiest companies. We're not gonna do always the well-known, but we will do something that will widen out your investment knowledge. That is the goal. Now, for the tip of the week, I want to talk to you guys about dividend reinvestments. Now, a lot of people don't know much about dividends, and let me go ahead and give you guys a quick rundown on what dividends are. So again, dividends are basically stock incentives that pay out in cash every quarter, right? So stocks typically pay dividends on a quarterly basis in a small fraction of share. So for example, we may have a stock that may be worth $100, and they'll pay you every quarter about, let's use the example of 20 cents every quarter. So at the end of the year, you had collected 4 dividends of 20 cents, you would have made 80 cents for the full year, right? Now, there are ways, or actually, Dividend reinvestment is where instead of the company paying you in cash, they are willing to pay you in fractional shares of your company using the dividends that you own. This can be very major because let's say you're very bullish on a company, right? For example, I am bullish on Apple. They run the world. A lot of my investments are held in Apple. So if let's say I receive a dividend check of $1,000, instead of me receiving it in all in cash, they will buy $1,000 worth of Apple. And it'll be some in full shares, depending on the current price of the stock, and it may be fractional shares, but it allows me to put my money back into a company that I already believe in instead of me having to manually purchase the stock myself. All my stocks that I own are DRIP eligible. So I invest or I reinvest all my dividends, just like how companies reinvest all the cash or a lot of the cash that they receive. This is a slept on idea. And it doesn't mean, and for example, you may not, let's say you're at retirement age, you can also unenroll in DRIP reinvestment and receive those dividends in cash. So I wanted to give you guys a live example so you can see what that looks like. So let's say we have, I used Apple before. Let's do Apple. We'll try QYLD. Wait a second. We'll also do Coca-Cola. We spoke about that last week. And then let's go ahead and do Chevron, since that's what we're talking about this week. And by the way, this is TD Ameritrade. This is an income estimator. Let's go ahead and do 300 shares of each stock. And you guys can see what the dividends would look like. So to purchase all these shares, you would have to have, mind you, 300 shares of Chevron, QYLD, which is a stock that I've recently found out about, I really like a lot. We have Coca-Cola and we also have Apple, right? Market value is the current cost of all these companies. If you look, it adds up to around $121,000. The estimated annual income, this is the dividends that you would be able to collect from owning these shares. For a Chevron, you would make at least $1,700. For QYLD, you would get $727. Coca-Cola, $528, and Apple, $264, right? Here's the dividend yield, which is the percent that you'd be able to make off of those shares. Now, if I invested in DRIP within these companies, for Chevron, it would buy $1,704 worth of Chevron stock, right? So if the stock is $170, let's go ahead and pull up my calculator. The stock is $170 and we make $1,074 at the end of the year, or within the 4 months, or I'm sorry, within the 4 quarters, they would have bought at least 10 shares of Chevron. Instead of me receiving it in cash, I'll get 10 more shares of Chevron. Now, like I mentioned before, if I did this for all my companies, this is the total amount that I will receive at the end of the year. But if I remove myself from the DRIP program, this is how much I would make just in cash, just by owning these companies, right? So basically my money, making money. and this doesn't include appreciation within the stock. So just something I wanted to show you guys. That's our tip of the week. So hope you guys learned a lot. Once again, this was a slow week within the market. And we'll see where next week takes us. If you have any questions, go ahead and hit me up if you're ready to join the stock club. And that's one thing I know I don't talk about as much. But if you would like to join the stock club, we do have a website, or we do have a page where you can sign up. That is over here on Gumroad. Let me show you guys that. If you were to go to Bombi Financial or bombiconsulting.gumroad.com, you can see all of our products here for you to purchase. So if you wanted to go into the stock club, you can click stock club membership, and you could sign up for $275 every quarter, or you could pay every 6 months, which is $450, or if it's yearly, you could pay $875. You do get access to our Telegram, which gives you alerts to when to buy stocks. You also get daily updates on how the stock market is doing, stocks that we are looking to invest in, stocks that we personally like. You also get tips throughout the week, and you also get access to our Stockommon Cents a day early. So while it does drop on Sundays, you'll get access to it on Saturdays to get your study started. So I wanted to go ahead and promote myself, because we are here to promote financial literacy and to make our people not only better investors, but to create generational wealth for our generations down the line. So I thank you guys for listening. I thank you guys for watching, supporting. Go ahead and subscribe to the video, send out to friends and family, and we'll see you guys next week.